Joining us, Mr. Arun Leslie John, Chief Market Analyst at Century Financial. Welcome, sir, and thank you for joining us on CNBC Arabia. Let us first discuss, of course, the return to earnings for the UAE markets during today's session. You have the floor.
So we expect the UAE market earnings to grow significantly in the third quarter of this year. So as we know, UAE's non-oil economic growth right now, the non-oil part of the GDP growth is expected to be 5% plus for 2025 and 2026. So this growth is likely to be reflected in the earnings provided by the companies, both ADX as well as DFM. We expect our performance from the banking sector. Revenue growth will be, we expect it to be strong. The real estate sector, the momentum is still there, and even the consumer discretionary sector. So we expect the overall results to be on the better side.
Now, since you are expecting a positive reaction today, we have actually a positive reaction for the banking sector and a return to positive earnings for the bank. We're talking, of course, about the Abu Dhabi Commercial Bank, Abu Dhabi Fast Bank, etc. Despite, of course, the listing of primary shares, despite, of course, all the situation, we are still witnessing earnings for the banking sector, whereas we are expecting the U.S. Federal Reserve to decrease the interest rates. What's your reading about this, and how do the shares react positively despite the reaction when it comes to the reduction in the interest rates?
The Federal Reserve reducing the expected reduction of Federal Reserve interest rates in the upcoming meeting might impact the net interest margin of banks. But on the other hand, there's also one positive side to it. The positive side is that the reduction in interest rate can translate to reduction in mortgage rates, reduction in personal financing rates, and reduction in loan rates across the UAE market. So that could be providing a boost to the economic activity. And the real estate sector is already strong. We could see further momentum for the real estate sector. The personal consumption also could get a boost. So even though there will be a reduction in interest rate, we expect the banking industry to overcome it by processing more volume of loans and getting more business on their books. Let us not forget that the primary reason for the banking sector outperformance is the fact that UAE has been an island of stability in this world. Now, all the major economies are facing some kind of an issue with United States, whether it is Europe, whether it is China, whether it is India, or even parts of Africa. On the other hand, UAE has a stable relationship with United States, and this has helped protect UAE's status as a global trade finance hub. Now, one obvious beneficiary of this is certainly the banks. Banks are an intermediary of the economy. They take the deposits and provide the loans. With a lot of companies relocating to the UAE, we expect the business of UAE banks to grow. Now, apart from that, during the last few years, after the COVID, UAE banks have tried to reduce the number of branches. UAE banks, the biggest banks, they have announced consolidation among themselves. So this has resulted in a reduction of their expenditure as a percentage of the overall revenues. Now, they have increased their digital exposure. The productivity of the UAE banks have improved a lot in the last few years.
Thank you so much, Mr. Arun Leslie John. Thank you for joining us from Century Financial.